Hello everyone. Welcome to Net Diligence Virtual Cyber Risk Summit. My name is Heather Osborne and I'm the Director of Global Events and Programming at Net Diligence, a cyber risk assessment and data breach services company. Net Diligence is pleased to bring our thought-leading content to the virtual space with this new webinar series. Visit our website at www.netdiligence.com to get more information about our upcoming webinars and in-person events. Before we begin, I'd like to extend our heartfelt gratitude to our virtual Cyber Risk Summit sponsors, particularly Aspen Insurance, our diamond sponsor. I'd also like to thank our 100+ speakers for bringing their thought leadership to our program. For today's webinar, we will be using the On24 platform. Right now, you should be viewing the On24 dashboard, which shows the live viewing screen. During the webcast, all participants will be in listen-only mode. Today's presentation is slated for approximately 45 minutes, with 15 minutes at the end for questions. Our panel of speakers will be taking questions throughout the session via the questions widget. Please type in questions during the presentation and click submit. If your question is of immediate import or concerns technical problems, you will receive an immediate answer by text. You can also find a widget entitled Resources, where you can download assets provided by the speakers and sponsors for each webinar. Just click the resource in the box and it will be automatically downloaded. If you are interested in receiving CLE or CE accreditation for this program, you must stay on for the full duration of the webinar and answer 3 polling questions that will appear during the course of the program. Additionally, please fill out the participant information questions. This will ensure that you are correctly matched to the state and professional organization. As a reminder, this webcast is being recorded. After the presentation, you will receive an archive link for further review or for sharing. The webinar will also be available for future viewing on our website. Again, thank you for joining the Net Diligence Virtual Cyber Risk Summit. We hope you enjoy the program.
Hi, my name is Owens. I'm the Cyber Global Underwriting Executive at Markel Corporation. I'm excited to be here moderating the Digital Risk Management webinar discussing lessons learned from the current environment. Today, I'm introducing our esteemed panelists. Graf is the Assistant Vice President of Information Security for CNA's Risk Control Unit. Nick has more than 15 years of information security experience and specializes in data leakage prevention, security policies, incident response, data breach, and security awareness. Nick holds various certifications, including the CISSP, Certified Ethical Hacker, and Certified Information Privacy Technologist designations, as well as the ARM and a CIPP. Nick is also a Fellow of Information Privacy with the IAPP. He has presented courses on privacy, big data, the cloud, and healthcare risks, and has also written and contributed to articles regarding information risk, social engineering, mobile device security, phishing, and personal password management. Our next panelist is Andreas Kaltsounis. Andreas is co-leader Digital Risk Advisory and Cybersecurity team at Baker & Hostetler LLP. Andreas helps clients anticipate, manage, and respond to complex privacy and security issues in connected, data-driven organizations and co-leads the firm's National Digital Risk Advisory and Cybersecurity team. He brings a unique perspective to his work with clients, developed from his experience as an attorney, a certified information security professional, a leader at an international information security consultancy, and a federal agent investigating criminal, regulatory, and national security cyber matters. He holds his CIPP, CISSP, GCCC, as well as certifications in pen testing and forensics. And last but not least, we have Sarah Kahler. Sarah possesses 21 years of combined experience in management consulting and professional services organizations for a worldwide strategic consulting firm, product technology startup companies, and is currently with RSA. Sarah's hands-on experience managing and delivering services engagements to Fortune 500 and 1,000 companies spans multiple disciplines within cybersecurity and integrated risk management, ranging from strategic planning, process design, education, training, to technology design and implementation. So very warm welcome to our panelists who very esteemed, given all these different certifications, been a bit of an alphabet soup here. So let's take one break before we get into the agenda of our webinar today and do a quick polling question. So the life cycle of data generally refers to the creation, storage, and destruction of data, Darwin's theory of natural selection of data, or the preferred exercise equipment by the ISO. Now that we've done that polling question, let's get into the nitty-gritty of the webinar. Today, the topic of the webinar is digital risk management. So the loss, misuse, and wrongful use of data are at the heart of most cyber breaches that lead to claims and litigation. This session will provide a deeper understanding into the life cycle of data and proper digital risk management. We will examine how data is created, stored, and ultimately destroyed. We'll explore the challenges facing policyholders and what we can do to better support digital risk management. Let's start trends impacting digital risk management. So cybersecurity and privacy is already a world of evolving trends. Then comes 2020 and we're facing a pandemic and protests. So let's talk about some of these old trends such as ransomware and changing regulations, as well as some of the new trends such as COVID and how attackers are taking advantage of the current environment. There are new concerns in the last few months around digital risk management with increased work from home environment due to COVID-19. Nick, can you talk about how the remote work environment creates heightened worries in regards to loss of data?
Yeah, happy to weigh in. With a remote workforce that's now working remotely for an extended period of time, things that previously worked fairly easily, like pushing out patches to laptops and devices, can become more difficult. When these machines are not on the local network, again, getting these patches out and ensuring they've been pushed out and getting that report confirmation back may not be as straightforward as it was in the past. I've also seen issues with people working in their non-standard office environment, that they may be additionally distracted in these environments, and that can lead to successful social engineering attacks where previously they may have been less susceptible to those sorts of things.
Great, thanks, Nick. Andreas, as employees are returning back to work, we are seeing other concerns than loss of data from COVID-19. There are also issues around misuse and wrongful collection of data with symptom tracking, contact tracing, and other advanced uses of technology. Can you discuss some of the privacy concerns around collecting this type of information and what potential regulations may come into play?
Yeah, absolutely. Thank you. So this is obviously a significant problem for a lot of companies right now that are trying to figure out just how to get back to work and get their people back in the building safely. And we're talking with a lot of clients that are, one, dealing and struggling with the regulatory issues. What do I need to worry about and how can I do this? And then they're, on top of that, dealing with just the logistics issues of how do we even get this done. So on the regulatory side, the first point that I think is important to get out of the way is that this is not generally a HIPAA issue. We get this question a lot. Oh geez, this must be a HIPAA issue because it's medical information, and of course that is not the case for most companies, and most of the data we're talking about here. HIPAA is specific to specific covered entities. And the patients for those covered entities, and so the only potential implication for businesses is if they run their own health plan and have health plan data that somehow may be tied to the COVID tracing, but generally the data that would be collected and reviewed for tracing purposes would not implicate HIPAA. So aside from that, there are a number of issues that do come up. One would be just general state data protection laws. A number of states have increasingly been adding medical information that is very broadly defined to their data elements they consider sensitive data elements. So if a company is collecting that information about a potential physical condition or diagnosis, then that may fall within that protected data element in a state, which means that it also may trigger a breach notification if that information gets lost. So it's important for companies to think about if they're going to be collecting data of any kind related to treatment, diagnoses, that they're protecting that data and ensuring that it's not going to become a data breach. And then finally, there's, of course, international data protection laws as well that are right now broader than most of the laws we have in the U.S. And so when you look at a framework like the GDPR, there's obviously much stronger restrictions. And so any company that's operating internationally needs to think about not only their sort of domestic headquartered rules, but what they have overseas at other international jurisdictions as well.
Wow, it seems like employers and policyholders have a lot to think about around privacy with COVID. So Andreas, in addition to the heightened privacy issues with COVID, we were already in the midst of a really evolving regulatory environment. Can you discuss some of the developments around digital risk management with the recent regulations such as CCPA and BIPA and some others?
Sure. So BIPA has obviously been around for a little while. It's the Biometric Information Privacy Act out of Illinois, and it's generated a lot of interest because, relatively, we've got one state with this law, but it's generated an outsized number of lawsuits related to the use of biometric information in the employment context and other contexts. But, something as simple as using a thumbprint on a reader that tracks employee timekeeping can all of a sudden turn into a significant expense for a company. And so, when we're looking at something like contact tracing apps and how those contact tracing apps are tracking the employees, or we're talking about temperature measurements. Some of these apps are thinking about using something like facial recognition as part of the identity piece, and all of a sudden now you get back into the concern about biometric identifiers and whether it's potentially triggering that regulation. Aside from that, we've obviously got the CCPA issues that are heating up. Despite significant calls from industry, from law firms like ours, and other groups asking the California AG to consider delaying enforcement because of the serious concerns around COVID and other issues that companies are dealing with. The AG has rejected those requests and announced that his office will be going forward in a matter of days now on July 1 with enforcement of the CCPA. So we are anxiously waiting to see what that's going to look like, what the targets are going to be, and what the actions are going to be. But the Attorney General is certainly moving forward. And then in addition to that, just on June 24th, the CCPA 2.0, as many call it, the new California Privacy Act that's meant to strengthen and correct some issues in the CCPA, qualified for the ballot on June 24th, and so it will be, it appears, on the ballot in November. And so we'll all be anxiously awaiting to see what comes from that. So, and then percolating in other places, there are COVID-related federal privacy bills dealing with privacy protections around COVID and contact tracing data that's collected. And then, although I'm not optimistic that it's going to move forward, there's been an increasing number of federal privacy bills, general federal privacy bills that have been introduced, including the most recent one from Senator Brown that proposes to apply probably the most strict restrictions that we've seen in a proposed bill, and severely limits the use of any data collected by an organization to that which is essentially strictly necessary for the purpose it was collected, and restricts virtually any other use. So there'll be a lot to watch over the next 6 months here.
Absolutely. It'll be interesting to see what happens with enforcement of CCPA, and I'm not going to hold my breath on the federal bills, but I will continue to watch those closely. Moving away from regulations for now, let's discuss ransomware. There's so many variants of ransomware out there, and they seem to be changing and getting more sophisticated by the day. Nick, can you discuss some of the trends in ransomware around hackers turning to exfiltration of data?
Yeah, so obviously everyone in the room is aware of ransomware, and traditionally it was always they would get on your systems, it would encrypt your data, and then the payment would be made for the decryption key. We've seen as businesses become better prepared for these sorts of attacks that the bad guys are looking for additional ways to inflict pain or exert pressure onto companies, again, to get that payment. So in addition to encrypting the data, we're also seeing that they are exfiltrating a copy of the data off of the target network. So when the communications begin as to payment for decryption keys, etc., they can now also threaten that they have a copy of the data that they may publish online or do something else with, so that the company can't just say, well, we have a backup, we're going to recover from it, and so you, the bad guys, can go pound sand. In addition, so you're paying now for the decryption key, you're paying for the potentially deletion of the exfiltrated data, again assuming you can trust them to do that. But we've also seen the attacking groups threaten to push the data up for external auctioned on the dark web, again to try to make money. And so we're just seeing that they are continuing to expand the avenues for again, getting money and for how they exert pressure against these companies. And it's going to continue just to be this kind of cat and mouse game, unfortunately.
Sure. So Nick, you mentioned recovering data when you're talking about ransomware. Turning to Sarah, how are cyber recovery processes, policies, and procedures changing to keep up with the changing trends around ransomware as well as around the different regulations that Andreas was talking about previously?
Sure. So recovery after a cyber attack, natural disaster, or a man-made event is essential, but it's not enough. We really need companies to transform from being just recoverable to being resilient. And this requires a change in culture, policy, process, and procedures too. But with these changes, improved business resilience is the goal, which will allow companies to adapt to disruptions while maintaining continuous business operations and really safeguarding what's most important, like their people, assets, and their overall brand equity too. But when I think about the relationship between business resiliency and compliance with the regulations, it's complex. During a disruption, it may be difficult to comply with the applicable regulatory requirements because the systems are down or data is just unavailable. And as we've seen and we know, regardless of the industry, regulators they're focused on cyber risks, and they're drafting new regulations, seems like all the time, increasing their emphasis on cybersecurity during those audits and investigations. So, while companies are trying to recover from cyber attacks and emergency situations, including pandemics, it can be kind of quickly overwhelming. But sometimes those regulators may issue a waiver of some of the requirements. And if we think a moment about GDPR, during this pandemic, we've seen many EU countries collecting personal data as part of their pandemic response, but they still need to comply with the GDPR. However, GDPR does address public health crises specifically and includes provisions relating to the processing of personal data, but it needs to be clear how and when it applies. So companies shouldn't count on a reprieve's adherence and make sure that they do have those processes, policies in place, and implement the plans to comply during the disruptive events. And I think it also pays to discuss options and implications with the regulators before an event occurs and potentially even involve them in the testing of the recovery plans.
Absolutely. And you mentioned regulators a few times. So we've seen some issues around account takeover and adjustments in the way regulators are perceiving those account takeovers. Andreas, can you discuss some of these issues and if the fault should go to the users or the company as well as what types of controls should be in place?
Sure. So, account takeovers have been a problem for a little while now, of course, and I think we're just seeing it continue to become more of a problem as more and more credentials are stolen from different companies, published out on the the dark web and other places, and they've been consolidated now into these massive lists that attackers can use, and as a result of that, we also have a pretty good idea now of how how people select their passwords and use them. And if it was, summer 2019, we all know it was, what the next password is probably going to be that the person selected, and each quarter thereafter. So, so the account takeover problem is not going away anytime soon. And historically, companies would treat this really as if it was a user problem, and it was, hey, this wasn't a breach of our system. This was a poor password practice. Someone either picked a bad password or shared their password across multiple sites, and that's why someone was able to get into these accounts. And what we're seeing is really that I think that position is not going to hold water, depending on the type of organization we're talking about and the type of customer-facing account that we're concerned about. And so, the more sensitive either information or process that is available in an account. When I say process, I mean, can money be transferred? Can someone's retirement account be accessed and activated? And then, of course, just the type of data that's available in the account. The more sensitive any of those things are, then I think we're to a place where the company really needs to take some responsibility for essentially protecting the user from themselves and their bad practices. And so, regulators are expecting to see things, and this ties very much into, like with the GDPR and the requirements for privacy by design and security by design. We're thinking about things like, are you showing information back to the user in the account that's just unnecessary? Unmasked social security numbers, unmasked other sensitive information. That's a great way to, avoid, even if there is unauthorized access to an account, that it doesn't need to require, result in a data breach because you're just not showing that information. And then other things like access controls on the account, and at least offering, multi-factor authentication, if not requiring it, depending on the type of account. And there's a list of other things that we would recommend companies think about, having web application firewalls that, rate limit and do other things when these attacks come in. But really the point at a high level is, companies know these are problems. This is a well-known problem. Regulators know it's a problem, and companies need to put some controls in place to help users protect themselves from their bad practices on the Internet.
Absolutely. So one of my favorite giveaways from a conference was a koozie that said, "I drink because your password is password." So there's a lot of challenges facing the insurance industry with all these trends. Let's turn to see how some of those trends are impacting the policyholders. Sarah, what tools are policyholders putting in place to combat these hurdles, such as specific controls or governance structures? Also, should there be security steering committees?
Yeah, thanks for the question. It's important for organizations to bring together security, IT, and risk management leaders and teams to reduce the business impacts of cyber attacks and, really manage digital risk while still being able to accelerate innovation, drive business objectives, et cetera. This has traditionally been a challenge because these functions typically have very different objectives and perspectives. But by enabling more governance through mechanisms like steering committees, the security, risk, and IT teams can act as a unified team more and then find ways to secure access and ensure compliance while still supporting the speed of the business. I think it also helps for these teams to become looked at as business enablers by speaking more in business terms so that cross-functionally people can understand how they are making the business more agile and enable it to innovate. As an example, when organizations roll out business continuity plans, security should no longer be looked at as siloed IT controls, but really, it must be part of an organization's enterprise risk management strategy with security and risk controls closely coupled as part of that business continuity and also resiliency plans. So I think, security risk leaders should continue to see how their teams can work with each other in areas such as breach readiness, risk reduction, incident response, and even post-breach adaptation.
Absolutely. I think those policies and governance structures are very necessary. Let's take another quick break for polling question number 2. True or false? Reasonable cybersecurity is a very easy concept to understand and implement. All right, moving back to the panel, moving back to ransomware. We often get the question to pay or not to pay. So Nick, what are your thoughts around this?
Yeah, definitely a good question, and sometimes it's you look at it from the aspect of like there's the moral and ethical obligations around it, or you look at it from the perspective of do we actually just need to pay it because we don't have a backup to recover from, and we need to move forward with business. So I think for any given company, they should ask these questions. Think about these questions ahead of time, before they're put in the situation where now it's an emergency and they're trying to, their hair's on fire, so to speak. But also then be prepared. Have a tested incident response plan in place that you run through on at least an annual basis, and define. Look at these questions and figure out how will you respond. Do we have a moral or ethical obligation against making the payment? And if so, then a company should take all the steps possible, at least within reason, to ensure that they are better prepared to help avoid this situation in the first place.
Absolutely. So Andreas, how are the attackers changing their tactics when it comes to ransomware? And also, Nick talked about whether to pay or not, but even if a policyholder doesn't pay, could there still be notice obligations?
Sure. Well, Nick earlier talked about, and I won't repeat it, the change in the tactics. I think that essentially the attackers now, instead of just encrypting data in place, are also stealing it. So what that means for organizations is, there's a couple implications. One is on the decision to pay. First of all, it's not just a question of getting the operations back up and running, right? Maybe a company has perfect backups in place and can recover quickly from those backups, and so there's no need to pay the ransom for recovery purposes. But because the actor has stolen data from the organization and is demanding a ransom to not release that data publicly, there's a question about whether the organization needs to pay not for the operational recovery, but to prevent that release. And depending on the type of data that's involved, if it's, for example, let's say employee data, very sensitive intellectual property, some other sensitive internal information that the company just cannot tolerate being released publicly, there may very well be a need to pay a significant ransom that has nothing to do with even getting a decryption key and recovering systems. And so that's a difficult choice for companies, and we unfortunately see it all the time, which is over the last 6 months, which is we've got our systems all recovered. We don't need to pay this guy to get our systems back up, but we don't want them to release the information on our 4,000 employees. And we're going to have a hard time explaining to our employees why we didn't do everything we could to prevent their information from being released publicly. And so a number of companies have made the choice to pay significant sums, just to prevent the public release of that data. Now, the second question is, what if you do pay in that scenario? Does that change the fact that you've got a notice obligation? And of course, unfortunately, it doesn't. So the fact that the data has been taken by a malicious actor and they've already got it, we certainly can't rely on that actor's promise to delete the data, and the fact once it was taken, the breach has occurred and the notice obligations attach at that point. So paying is not about avoiding notice. Paying is about trying to mitigate some harm to individuals. The question always comes up, how can you trust this person not to actually release the data. Why would you pay them? They'll just release it anyway. The odd part of this is there is some honor among thieves in this group. They know that firms like ours are dealing with them all the time, that the forensic firms that are facilitating payments are dealing with them all the time, and they don't want to be known as the group that goes back on their word and doesn't follow through with their promises. So our experience has been that if you do pay, they actually do take steps to demonstrate that they're deleting the data. Of course, they could have done something else to have additional copies, but and that they don't release the data publicly. So payment does, for most purposes, work in trying to at least mitigate the damage. But it's an interesting calculation companies have to make, and certainly a significant change over the past 6 months from what we were dealing with before.
Honor amongst thieves, I like it. I know that they also have been known to have really good customer service as well. So now that we've talked about some of the costs involved with ransomware, as well as fines and penalties that can follow some of the privacy regulations, one would think it'd be pretty easy to get the support of the board when it comes to IT budget and cyber insurance. However, we're still often seeing policyholders struggle with this. Sarah, how do you spell out to the board in terms of dollars how much an incident can cost?
Sure. Yeah, CISOs are increasingly being asked to rationalize investments in the security technology. They're also being asked to define what it means to transfer security risk, primarily in terms of cyber insurance. I think often cybersecurity is treated as a technical concern, and important business questions such as, are we doing enough? Are we spending too much? Are we spending too little? They don't really get answered or not answered well. So translating technical risks into monetary terms helps enable the CISO to communicate cyber risk in context of the business. We know that quantifying risk isn't easy, and the ways to measure it continue to evolve. I think many organizations, though, they've moved from that red, amber, green risk scales to more of the quantitative models, such as scoring systems. And then there are methodologies out there such as, for example, the factor analysis of information risk, or it's called FAIR, that are used for quantitative IT and cybersecurity risk management. So it kind of does take that and put it into really terms of dollars. And by moving towards a monetary-based quantification approach, I think it kind of tends to unlock much broader capability for companies. For example, including calculating potential losses for cyber insurance efforts, or prioritizing investments based on relative reduction of the financial impacts of a security breach. So I think with this financial data, organizations can make more informed decisions regarding their security investments.
Definitely. I think the monetary-based approach is the way to go to make sure the DNOs are on board to provide the budgets needed and the support needed. So we've discussed trends and concerns facing the insurance industry and policyholders. Now let's discuss how policyholders can respond and what we all can do to help as the insurance industry. So Nick, how can we all work together to prevent or mitigate incidents, and what are some of the suggestions you would recommend to your policyholders? Also, from an underwriting standpoint, how do you consider data within your underwriting, and what are some recommendations for policyholders around data collection as well as storage?
Yeah. So I think we're not going to reinvent the wheel here, but obviously the more a company can do to have good security controls in place, to have that layered defense is beneficial. Understanding what regulations apply to them. If they've done things like really focus on security awareness training and phishing campaigns. Your employees are on the front lines, so to speak, and an employee who clicks on links or opens attachments without thinking can very easily bypass a lot of the other security protections that you may have put in place there. As we mentioned previously, understanding how you transmit data, that it's secure in storage and transmission, that you're backing up critical data, and again, tabletop scenarios for incident response, business continuity, and disaster recovery are all really important. When we shift gears and look from the underwriting side, when a company, if you're kind of presenting to a panel of potential insurance companies, looking for coverage. Be able to clearly represent and showcase your overall security program. Be prepared to talk about some of the details. Showcase that you know the type of data that you hold, also the quantity of data, at least a ballpark figure. If you can show us that you have 100,000 records versus 1 million versus 10 million, that's very helpful as well. What the data is used for, how it's stored. Do you have segmentation of your network? And then how identity and access management occurs there. Lastly, I'd say focused on things like privileged access management is a hot topic in the insurance world right now. If you can showcase that you have additional controls around those very powerful accounts, server administrator, database administrator, network administrator, etc. And also show that you have a retention policy. And hopefully, that said, your retention policy isn't that we keep everything forever, but that you have a methodical approach to keeping data as long as is necessary, that supports either a regulatory requirement or a business need. But beyond that, getting rid of data that you don't need can be very beneficial. Data kept otherwise can increase your overall risk. And lastly, look for, implement multi-factor authentication anywhere you can. Internally, externally, on cloud resources, etc. Showcasing all of those sorts of things will go a long way towards showcasing yourself as a good cybersecurity risk.
Thanks, Nick. That's helpful. There's a lot to think about around data collection and storage and removal. Nick had mentioned some tabletop plans. Sarah, what are some other plans you would suggest to policyholders prior to an incident as well as to after an incident occurs?
Sure. So, it's definitely important to have, I think we mentioned it earlier, the incident response plans. So those plans in place for your security analysts so that they clearly know what their kind of investigation and escalation processes are, as well as the criteria to, formally declare a critical incident or a breach. But I think really at that point, we also need to have what I call breach readiness plans. So once a critical incident is declared, then it should invoke those breach readiness plans. And really, that's what gets all of the other functions involved, because we certainly don't want functions within an organization to be scrambling to figure out their responsibilities, handoffs, and communication channels for a data breach while it's happening. So we think about, communications, HR, physical security, PR, and all of these different other functions within the business that need to know their roles and responsibilities as well. And so I think it's important to do those tabletop exercises so that they are walking through both the incident response and the breach readiness plan to make sure that everyone is prepared and they clearly know their responsibilities. So after an incident occurs, always need to go back and make sure that we update those plans and keep them current, just to, just identify any holes that were found or any kind of areas of improvement.
Great, thanks, Sarah. Avoiding scrambling post-incident is ideal, so those plans and tabletop exercises are definitely key. So now for my favorite part of the panel, it's crystal ball time. So Nick, it's been made clear over the last few months that the world is changing. What are some of the hurdles we are going to face going forward with people working from home more often?
Yeah, I think within the coming months, I think there'll be a realization, months to years, let's say, in corporate culture that maybe this work from home thing has actually been pretty good. I think there'll be a realization that corporate real estate is very expensive, especially in large cities, and COVID-19 is showcasing us that we can have a remote, geographically separate workforce that I think in many cases has worked very well. With that in mind, as we said, it does present new problems. One of the biggest ones I think will just be keeping devices up to date, patched on the same standardization of platforms and things like that. And so I think that'll be one of the problems that most companies will need to be aware of and hopefully work to overcome with our new spread out workforce.
Absolutely. Thanks. I could see that there's a silver lining there with the work from home. The insurance industry has tended to be pretty old school when it comes to that, so I think that that'll really help the industry going forward, not to mention some of the positive climate change that we've seen. Sarah, how are corporate policies going to have to change with this more dynamic workforce?
Yeah, sure. Even now during the pandemic, we're not in this normal work from home mode, but there are many workers out there who they don't typically work from home, so they may not have like the right equipment set up. They may not be thinking about the risk of things like their home printers that are not properly protected. So we will need to have updated policies and training and education available for employees to better educate them on how they can stay protected. Yeah, I think it's important that companies, they first define cybersecurity roles and responsibilities for the entire workforce, and that includes not only their employees, but the independent contractors and temporary workers as well. I think, it's really that kind of third party that we need to account for and not just our employees when it comes to policy. We should also create acceptable use policies and security configuration requirements for mobile devices and any other removable media. And then, I mentioned the policies and controls for the remote, office-based, temporary, and the hybrid workers too. And then really prioritize our resources based on classification, criticality, and business value. So especially during these uncertain times, it's going to be important that organizations adapt their current policies and controls based on that changing workforce needs, and then also based on observed behaviors.
Yeah, definitely adapting is key, and I think also you had mentioned training and then thinking about the third parties is absolutely necessary. So Andreas, speaking of change, another constant change we see in the cyber world is the evolving regulations. What does your crystal ball tell you about the regulatory environment for the rest of 2020 and into 2021? Also, should businesses be concerned about the European data transfer laws?
So it really is remarkable when we look over the past several years how much the data protection regulation has grown around the globe, right? It's certainly a lot of it was fueled by GDPR coming into effect in May 2018. And, just in the last few years, the way that the U.S. generally views data protection law and sort of its acceptance of these sort of European principles of data privacy and protection is I think really interesting. I mean, if you'd asked 5 years ago, I think people did not generally take the view that the U.S. would be jumping on the EU approach to data privacy and protection, and that's where we're at now. When you see privacy bills being introduced in different states, they openly and very excitedly talk about how it is modeled on the GDPR, and it is intended to be a GDPR-like protection for the U.S. and its citizens. And so I think that's an interesting trend, and we're of course seeing the GDPR drive similar regulation all across the globe as countries are trying to ensure that they have adequate protections in place to be able to continue doing business with other companies that are going to, other countries that are going to require those protections. So, domestically, here in the U.S., I think we're obviously going to continue to see these pushes to pass, CCPA-like regulations in many other states. This is no surprise, right? I mean, we saw the attempts happening this year. Most of them failed. I think the one that got the closest was Washington State, and it literally failed at literally at the last hour of the last day of the Washington session. And they're going to try again next year, and maybe they'll figure it out. The sticking points. What do we need to do to get more privacy regulation in the U.S.? What is preventing states from passing it? What is preventing the federal privacy legislation? It really comes down to, what does the enforcement look like? Is there going to be a private right of action for pursuing violations of these regulations? And in the federal bills, are they going to preempt the state's attempts to pass stricter regulation? I mean, that's the two issues that are going to perennially be debated at the federal side. And at the state level, it was the private right of action that killed, for example, the Washington State Privacy Act. It was about enforcement and who's going to be able to enforce these rights. So that's going to be interesting to watch, but we will certainly see more regulation coming. As I mentioned at the top of the session, the new California Privacy Initiative will almost certainly, it appears, to be on the ballot in November, and so we'll need to see what happens there as well. Internationally, we're going to just continue to see these international implementations of GDPR like privacy regulations. And so places like India, one is coming, Brazil, one is coming. These would have been here faster even, but it looks like implementation is being delayed in many of these places because of the COVID pandemic. But they've only been delayed, so they will certainly be coming. And then, the last piece you asked about the data transfer laws, and I think this really gets to, I think one of the most interesting issues around data protection and what's happening with all these global regulations, and that's, the sort of big picture question about how is data going to, move globally, and how is it going to support international transactions in business. And what we're seeing after a significant shift to globalization is we're seeing a retrenchment from many countries and a move toward not globalization but localization. And so when you look at India, for example, in its new data protection law, it's focused on localization and having data localized. If you look at China, it has significant regulations on data localization. Russia, there's even talk about Russia wanting to have its own internet that it can sort of disconnect from the rest of the world, and there's obviously reasons behind this that are not strictly focused on data protection, but we see authoritarian regimes interested in sort of being able to disconnect from the world as well. So right now, that I think is going to be one of the most interesting things to watch is the tension between the global internet and the localization of data. We have Brexit coming up at the end of the year, and no one knows exactly what that's going to look like. And we don't even know, for example, speaking of movement of data, is how the EU is going to treat the UK in terms of whether it receives an adequacy decision so that data can transfer freely between those two regimes. And so that we don't know. And then we also have this new Schrems II decision coming out of Europe on July 16 or I think 17, I think it is, July 17. And we're going to hear from the European Court whether the standard contractual clauses that are currently being used to transfer data from EU to the US or the Privacy Shield provides sufficient protection and whether the EU will allow that to continue under those frameworks. And this really all comes down to the EU being very concerned about the US's surveillance practices, and many individuals believe that regardless of what contractual provisions you put in place and agreements you make, there's nothing you can do about it when the U.S. Surveillance laws can overcome those agreements. And if a company gets a national security letter from the FBI that says you will give us this data and you will not tell anyone about it, does it really matter if you made some, a contract that said that you were going to do something with data? So there's just really interesting things happening over the next year about the movement of data, cross-border transfers, and data localization. And it's going to be very interesting to see the Schrems II decision. Obviously, a a decision that invalidates the privacy shield and standard contractual clauses is going to have major reverberations across the globe. I think just for that reason alone, that's probably not going to be the decision that comes out. But I imagine there will be some middle ground position that it ends up taking, and so we may have some modifications we need to do on justifying and sustaining those transfers. So that is, I think, in a nutshell, at least, sort of where I think we're going over the next year. It's no question going to be a very busy year for those of us that work in data security and privacy. There's going to be a lot of regulatory changes. There's going to be a lot of new regulation to comply with. I think, unfortunately, I think we are going to see more state regulation, a lack of federal preemption, meaning there's just going to be more patchwork rules to keep up with, which is just going to create new challenges for organizations. I don't know that it's going to make people's data more protected at the end of the day. You could argue that with all of the regulatory compliance obligations and people just trying to keep track of all of it, that it's losing the focus on the ultimate goal a little bit. But that's unfortunately where I think we're going, at least in the near to midterm.
Well, at least we'll continue to see demand for cyber insurance given all of that. So there's a lot to think about there and to keep paying attention to both domestically and abroad. So let's take one last break for polling question number 3. Who is responsible for digital risk management in an organization? The CISO, the head of compliance, the person in the cubicle next to me, or everybody? So Nick, Sarah, and Andreas, thanks so much for your comments and your time. We have a few minutes left to open it up to the audience for questions. We have a question in from the audience. Nick, what are your thoughts around insurers being blamed for paying ransom demands? Also, what is the role in helping for the insurance industry in helping their clients against ransomware?
Yeah, great question. I can speak generally. Most times the decision to pay or not pay the ransom lies with the insured. Obviously, though, that can vary. Every insurance carrier is a bit different. But overall, I don't think blaming the insurance companies for paying ransoms is fair. At this point, it's legal to pay a ransom demand. Think of it very similarly to the kidnap and ransom K&R policies that exist for executives. But at the end of the day, for an insurance company, our first goal is making our insured whole again when a claim occurs. And we have to balance that also with the potential business income loss. So if a business is down due to ransomware and they're losing income every day, your insurance carrier may be on the hook for that additional income loss, which can far exceed the actual ransom demand. That said, overall, the cyber insurance industry has a financial interest in helping to prevent claims before they happen. This is referred to as risk control or loss control. We make proactive recommendations to our insured to guide them in helping to lower the overall likelihood and severity of a successful attack.
Great. Andreas, do you have any additional thoughts?
Yeah, I think, on the first question around, blame for insurance companies, I agree with Nick generally. I think, there is concern in the industry around, who we're making these payments to. There have been some news reports. ProPublica did an interesting series where they attempted to trace where some of the payments were going in ransomware cases, and we know either from some direct evidence that's been collected and some information that's been released, and then I think we can assume in some other cases, where these payments are going. Many of them are going to criminal organizations, but some are going to nation-state actors. Some are going to organizations that have been designated as affiliated with nation-states or terrorist organizations. And so there is some concern over whether, an organization may be paying, millions of dollars to a individual or organization that has been designated for sanctions control under OFAC. And so, we have seen some attempt to try to put some checks around that, and we certainly implement that when we're making payments. But when you're making essentially anonymous payments to an anonymous Bitcoin wallet or some other cryptocurrency, it's obviously very difficult to know who exactly the money's going to. And so, there's some reasonable attempts that have to be made, and I think that for the most part has satisfied those concerns. But that is something that any organization, including the one who's ultimately funding the amounts, needs to be thinking about. And then on the how can insurance companies help with the prevention piece? Again, I agree with Nick. It's absolutely critical that preparation is the key to ransomware. Once the ransomware hits, there's sort of very little you can do if you haven't taken certain steps beforehand. So helping ensure through whatever levers the insurance company has to do that in the preparation stage, that a company has put appropriate controls in place around backups, ensuring that there aren't backups that are going to be susceptible to a ransomware attack, and just having backups isn't enough. It has to be backups in sort of a type and format that are not going to be susceptible to a ransomware attack. And so ensuring that that is in place, and then encouraging companies to think about how they're going to respond to a ransomware attack, what sort of, if they're going to make payment, how they would make payment, having those processes in place are absolutely critical. And so to the extent that insurance companies can help organizations think about and put those policies and procedures in place before an incident hits, can really pay dividends in the long run if something should happen.
Yeah, absolutely. I feel like oftentimes the cyber insurance industry gets more of a bad rap, but the way that we're actually helping these insureds out does not really get out in the news. There's a insurance group that's been put together by Brad Gow at Sampo, the number of carriers that are working together with FBI to try to combat ransomware and keep companies and consumers safe. So I think that's another item that really hasn't gotten out in the press much. So of course it's always the bad rap that we get, some of which has been fake news about not paying claims, when in reality some of those claims have gone into the traditional insurance policies. But we could have another panel on that. We have another question in from the audience. Sarah, with more people working remotely, what are your thoughts around new insider threats emerging?
Sure, thanks. Yeah, I think there's definitely a risk for increase of insider threats. If we're thinking about what an insider is, so certainly disgruntled employees that are looking to sabotage a network. We've got, former employees or contractors potentially trying to re-access the network to gather data. But we also have those employees and contractors who they unknowingly click a link in a phishing email, and that puts the organization at risk. And with more of our workforce now migrating kind of out of the traditional corporate network, that exposure to insider threats increases. We've got, resources that they're just not used to being outside of the office. That kind of remote workforce risks are no longer isolated to just the small percentage of our road warriors or individuals that are typically working outside. So now this population kind of represents a significant portion of staff from all departments with varying cybersecurity awareness and hygiene that are kind of working from home and not able to necessarily kind of be aware of all the things that they should be doing to protect the corporate network. Things like laptop sharing, potentially with family members who are not subject to the same cybersecurity awareness, in use on either insecure home or even public Wi-Fi networks, and then even potentially frequent use of email on non-corporate devices, which then gives limited or no visibility at the endpoint. So kind of this shifting of people and their technology outside means that our security professionals must reevaluate how the data is accessed and kind of what risk exposure is acceptable there.
Great. Thank you, Sarah. Unfortunately, we're out of time. We can answer any outstanding questions over email after the webinar. Sarah, Nick, Andreas, thank you so much for your time today, and a big thank you to the audience for your attention and participation. Everybody have a great remainder of the week and stay safe and healthy.
Thank you.